afternoon, everybody. Welcome to TraderMerlin Show. It is your Thursday edition. Holy shnikes, what a Thursday. Nice follow through for our major equity indexes. You know, we talked yesterday about how after the announcement, kind of felt there might be a little bit of a pop and didn't expect to see this kind of follow through. Glad I kept my short positions on the Russell. That certainly made for a good day. Hopefully you guys were short on that break. We broke through some nice demand zones on that Russell as well. So I will go through our top 8 markets and the 2% slide in our NASDAQ, which was a good one as well. But I'm going to start things off where I told you I was going to start, and that is with the EV future. Now, this all stemmed from a viewer question, which I've done this in the past where we talked about EVs, but I think it's just kind of important to kind of revisit it, particularly for those people who are looking to get into this space, because as many of you feel that some parts of this industry are getting a little overheated. Tom, thank you very much for the email you sent in with a lot of great content in there and a lot of very valid points with regards to EV space. So I'll bring some of those in today's discussion. So I wanted something graphically that kind of shows the future here, and I had all kinds of crazy looking cars. I like this one. I had 2 choices for the graphic for today's program. This was the first one, which is the EV future. And then I like this one too. This kind of feels more where we are at right now, which is the solar, the sun, charging power, and kind of sleek, cool looking cars that you're seeing all along the street. So this will be the main discussion, at least for the first 20 or 30 minutes of today's program, and then we'll get into what happened overall and some of the other trades that I made today. So Scott says this. He says, I own Tesla and would like to add more EV companies. Do you have any recommendations? Well, first off, no. I'm not giving any recommendations here. It's just about eye-opening knowledge, information, sharing that. And I'm sure, Scott, if you're here, there's a lot of people in chat who have, I would say, much more extensive backgrounds than I do in that automotive industry. So I'll start with the first one here. You know, there are many who believe that Tesla is a tech company. There's others who believe that it's a car company. And I kind of find myself somewhere in between. I think that what they're doing with the batteries and AI puts them in a little bit of a different position than most of the other car manufacturers out there. But, you know, looking at your Tesla chart here, it's nice to see Tesla, at least over the past 8-9 months, starting to rally back up, right? It certainly had a tremendous fall from back in October of 2021, where it was over $400, fell all the way down to 100. Nothing like a 75% slide in your share price to piss off some shareholders. Well, from that point, you know, really since January, we've been on a very nice uptrend. Higher highs, higher lows, looking good, although this most recent high we put in on about a week or so ago, not quite as high. So this is maybe a sign of slowdown. Now, if you're someone who thinks that Tesla is going to come out with a brand new battery technology, which I know they're working on, make batteries lighter, more efficient, last longer, that could put them in a much more competitive space than they are right now, because people would probably be buying those batteries from Tesla until China got a hold of them and copied them and knocked them off for much cheaper. So, good for you with the Tesla position. My question would ultimately be, you know, what's your time horizon here, and what do you think of Tesla going forward? Is it just a blind, I'm going to hold it because I love Tesla? That might not be the right thing to do. You know, you could see some big downside moves here in Tesla as well, due to a lot of the competition that's coming into the marketplace. And we're going to talk about that quite a bit here in just a second. So what I wanted to do is just show you real quick, and this is by no means all of them, but I wanted to go through and say, okay, you're looking at EV car companies. Who else is in that space? And I've got it off the screen there. Might be off the screen for you guys. Let me fix this real quick and pull that Rivian down a little bit. There you go. So these are kind of the main names out there. We've talked about all of them on this program, except for Lee. I don't think we really talked about Lee Motors, or Faraday. But Tesla, obviously the king. Now, when you're asking about what to put into your portfolio, it's almost impossible for me to even give a suggestion, because are you buying these because you like the vehicles? Are you buying them because they are a well-run business? Are you buying them for some other factor out there, right? For me in particular, like if I looked at this list, you guys all know which one I'd be adding to my list, and some of you think I'm crazy because Canoe would be the one that I'd be adding, simply because I like that vehicle. I like that style. It's something completely different than what mainstream transportation looks at, and that's something that I would put in as kind of a speculative position. But, you know, does Canoe's numbers look very good? No, they don't. You know, on this, you're seeing a rise up now of Rivian. Rivian's been doing absolutely fantastic. They're releasing tons of vehicles, numbers looking better, but here's your Rivian share price. So it had a big surge, right? And now giving back quite a bit of that surge it had back in June. Now, if we look at Rivian, you look at their numbers, they're still losing $1 a share. Right, you go back, there was $1.25, $1.73. These guys are losing money. They're hemorrhaging. And Elon Musk has made the point that this is the most difficult phase for these car companies to get through, is that period where, yes, you're producing vehicles, but you don't have enough sold to cover all the costs that you put into the R&D, your infrastructure, your manufacturing facilities, your production plants, all of that, including all the employees. That's the real hard part that Tesla struggled through, and fortunately they made it through, and now it seems like the glory days for Tesla. Well, will Rivian make it? I don't know. I know we've got a lot of Rivian supporters in the room. People love the Rivian. I think it's a pretty cool looking truck, except for those clown-looking headlights on it. But Rivian might be one that you want to add to your position, even with a low share price of $21. So others out there, let's run through a few of these. I'm going to kind of cherry pick and go through, I'll go through the ones I think might have the most opportunity to the upside. And one of those, well, I'll just go with Go EV. I know, I feel like I should be sponsored by them. I mean, this thing looks absolutely terrible. This looks like they're going out of business. And they might, right? EV fails on the short term. Andrew, when you say fails in the short term, are you talking about financially or as a vehicle in society? Like the EV companies fail short term, or are you saying that the car companies, the EVs, fail as far as a vehicle on the roads? Because I don't know if I necessarily believe that. We'll talk about some of the challenges to the EV space here. One of those certainly being charging stations and just power consumption. Anyway, so you look at Go EV. This is a pure gamble play. Right, this does not look good. This looks like absolute garbage. I would normally not want to touch this. However, I do like what they're building, and I might put a couple $1,000s on this. I should probably put a couple grand on it anyway, just to back up my words and go with Canoe EV, just because I like what they do, and I've shown you guys the vehicles before. They are a strange-looking vehicle. Clown headlights, not Healings, clown headlights, Tibor. Another one that's gaining more and more popularity is NIO. And you look what's happened to NIO, it's down 50% in just 1 month. That's an impressive slide. Now, grand scheme of things, what does NIO look like? It still looks pretty bad, right? You're back to its IPO. I don't know if it was an IPO or if this was a SPAC. I think this actually might have been an IPO. But you're back to those low levels. Now, one thing as we progress here that you might want to pay attention to, if you're thinking about adding any EV companies to your portfolio, is the tactics that car companies are using to not only bring in new purchasers, but to take their consumer base and convert that into other revenue streams. So NIO has released their own phone. They have an Android phone, and they've got a lot of people who own NIO cars, and particularly in China. So we'll see how it goes in other parts of the world. But now they're selling an Android phone, so now they're getting an extra revenue stream from the sale of their phones and a kind of a captive audience. They have all kinds of features built into that phone, so you can simply click a button on your phone and start your car. Again, I'm nervous on some of these technology things. I actually like having a key. It's hard to hack a key. Hacking a cell phone and starting someone's car remotely seems like a very distinct possibility. So, NIO, I would say, is probably high on the list that I would be looking at for a long-term play here. But, honestly, the chart looks terrible. And a lot of them do. Right? A lot of these car companies look pretty bad. So Andrew says, in the short run, or in the, what did you say there? You said EV fails on the short term. I don't know about that. I don't know if I would say they fail in the short term. If you're looking at getting around town, short distances, EVs are fine. If you're looking at long distances and traveling, from here to New York, from California to New York, yeah, that's probably going to fail. The costs are high, but we'll see those drop. Anytime you have a new product, typically that price is very high. We've seen Elon Musk actually start to drop those prices on his Teslas. Again, there's supposed to be another price cut coming here soon, and that overall will bring the whole industry down and also squash a lot of his competition that's trying to jump on the scene. Other vehicles that look nice, I'll tell you what, this Lucid looks pretty nice. The Lucid Ocean, but that share price doesn't look nice at all. So I think at this point you have, at least from the three that I've looked at outside of Tesla, which was NIO, you've got Lucid and Canoe, they all look horrible. And my economics background, also my trading background, would tell me that some of these are going to fail, right? These are on the road to bankruptcy right here. I mean, let's just look at Lucid. Lucid lost 40 cents per share last quarter, 43 cents before that, 28 before that, 40 before that. I mean, literally, they're just doing nothing but losing money quarter after quarter after quarter after quarter after quarter after quarter. So, at some point, they're going to have to sell their assets, sell their ideas, sell their designs to somebody else, or go bankrupt, or succeed. Thinking about an EV, yeah. And there I agree with you, Andrew. And this is the tough part. Okay, so when we look at EVs, again, the whole question here was spurred not to go a deep dive into EVs, was like, hey, give me some picks to buy for my portfolio. If you're thinking about buying an EV, I agree with Andrew. It is caveat emptor. It is buyer beware. And I would be more inclined to, I know I'm going to get some hate mail on this one, I'd be more inclined to go with somebody like Tesla, because Tesla has so many vehicles out there. They're established. I've got maintenance centers around, and probably not going to go under at this point. Now, let's go back to the vehicle that I think looks really cool, and that's Canoe, right? If I get the Canoe, which I have not put in my pre-order yet, I'm thinking about it. I'm really thinking about it. If I put in my pre-order for the Canoe and I get that Canoe vehicle and they do one run and they go bankrupt, now I'm stuck with a vehicle. I can't get serviced. I'm not going to be able to get parts for it. And ultimately, it's going to be just a giant eyesore dead in my driveway because I can't get parts for this thing. So that's definitely part of the caveat emptor, buyer beware piece I think Andrew's talking about. Which one did you own, Andrew? Did you own a Fisker? So if you're buying one, certainly want to make it with a company that you believe is going to be around. If they dissolve, then you're in trouble. Tom says, BMW has had an EV for over 10 years. The i3 now has full-size sedans. It's odd how they get no. You know why they don't get attention, Tom? Because that i3 was kind of an ugly-looking car. It was kind of a weird. You're right. I don't know why they didn't get more attention. It's actually pretty fast. I went for a ride in one. I thought it's pretty cool. But at first glance, when you see this little tiny thing going by, it's kind of an ugly car. It's almost like the smart car that was released over in Europe, and you really don't see them here in the U.S. They're kind of just ugly ones. All right. So if I was looking to add to a portfolio and I already own Tesla, I have to think of I'm going to buy into a car company that I think is going to make it. Rivian would be the first one that comes to mind. They feel like they're starting to make it, right? They're releasing their vehicles. You see them all over the place. You don't see, when you look at this list, I don't see any Canoes. I don't see any Faradays. I see a few Lucids. I don't see any BYDs. I see a couple Fiskers, but no new ones. I do have Toyota on this list. I have Toyota and GM, so you see some of those. And I honestly don't even know what the Lee Automotive looks like. So, I would be going with the ones I think have the power and momentum to be long-lasting. And even though NIO is not really big in the U.S., they're pretty big in China. So that might be a positive factor for me for NIO. Now, one that I do like is BYDDF, I think is the ticker symbol. Hopefully I got that right. Yeah, BYD Corp. So this is one that Warren Buffett was invested in. I do believe that Warren Buffett may have sold his holdings on this one. Let me bring this up here and see if I can find out for you. If you go to Guru Focus, I think it's gurufocus.com. They give you a list of what all the insiders are doing in their portfolio holdings. Let me real quick just see, because I know that Warren Buffett had a pretty big position in BYD, but he may have liquidated that one. So let's just go check here real quick. Get rid of that. All right, so let's go down the list here. I don't see BYD holdings anywhere on. This is his top. I think I have to pay to see the full list, but as you can see here, no BYD on that list. I remember reading something that he was selling, but let's see if they give me the full list. All right, BYD. No, I'm not seeing any BYD. So he apparently sold out of his position of BYD. But that's one of the reasons I was liking it, because Warren Buffett was looking into that one. Plus, I think they make some decent-looking cars. They got big money, and they're built from China. Being small and ugly doesn't stop a Prius from getting attention. True. That's true. Yeah, I don't know how Priuses even get sold these days. I'm going to offend all the people who drive Priuses. BMWs aren't as hot as they used to be. Same with Lexus. Well, I would argue that the BMW is still a hot-looking vehicle, but some of their EVs, especially the i3, the i8 kind of is a weird one, right? It's an odd-looking. I see BYD everywhere in Colombia. Awesome. Okay. That's good to know. I mean, it's you want to know that these companies are actually building cars and releasing cars to the public and can back it and sustain that for a while. Like, that's what has me really concerned about buying one of these canoes is I don't feel that comfortable about it. Now, some of the more established ones, if for the gentleman who asked the question initially, you could be looking at something like Toyota Motors, General Motors, but that's almost like a hybrid, right? You're not really going a pure EV play. Whereas Canoo, Faraday, BYD, NIO, Nikola isn't really commercial or isn't consumer vehicles. That's more commercial trucks now. Polestar, see PSNY. I have seen a couple Polestars around. I've seen them in malls. PSNY. Yeah, I mean, look at this chart. These look absolutely atrociously bad. This is terrible for Polestar. Their high, remember this was a SPAC, so their high was over $16. Now they're trading at $2. So what I would say here is, as a consumer looking to buy EVs, what are those challenges that we are expecting to face? So the first one that comes to mind is charging stations. There's been a couple articles and some real negative press releases about the Ford F-150 Lightning driving across country. They literally had to leave their truck at the dealership and get another vehicle because it just couldn't make it. Right? It was getting stuck, stalled, wouldn't make it across the states. Now, when we look at charging stations, I actually went out to the government site, and here it is. This is afdc.energy.gov. So it's a map of all the charging stations. I'm not so worried out here in California. I feel like I'm pretty covered. I got to say, I'm astonished at how covered some of the Midwest is. Now, if you're in Nebraska, you're in Idaho, Montana, North Dakota, you're not getting a lot of coverage. You got some shoddy spaces out there where it's not going to work. So the charging station situation, I believe, is getting much better, and probably within a few years, this will be completely solid. I'd imagine they're going to have a gas station will now probably be required to have a EV charging station. Now, Tom brought up some interesting points, and one of those points was that the current administration, Biden's administration, he has a sustainability plan. And in that, he talks about all government vehicles need to be 100 zero emission vehicles. So that's talking hybrids, you're talking electric, you're talking hydrogen, have to be 100% zero emission vehicles by 2027. Now, is that feasible? For the government to say that all government vehicles need to be, electric by 2027, I would argue that's absolutely doable. The government go out there and just say, okay, get rid of all our cars, let's buy electric and make it happen. I believe that could certainly happen. And they want 100% of their medium to heavyweight vehicles and big trucks to be there by 2035. That, I think, is plausible. I think it could happen. The other part of Biden's sustainability plan says that 50% of electric, hybrid, and hydrogen vehicles by 2030. Meaning in the next 7 years, half of all the vehicles sold in the United States must be electric, hydrogen, or some hybrid. I agree with you, Tom. I think that's completely unrealistic. I do not think that is going to make it in the next 7 years. You're going to have a lot of people fighting that one. I am one that first off, I don't think I should be forced to choose, but getting to all electric is going to take a lot longer than I think some of these governments have said. I believe Sweden said 2035. I think the EU is something similar. They want to be 100%, away from fossil fuels. Good luck with that one. I don't think that that's going to happen. If we get to that many vehicles produced that are going to be all electric, I think we're running a whole nother heap of other problems. Specifically, the resources to make those batteries, the infrastructure pieces are going to be challenging. So I don't see that happening. I agree with you on that one, Tom. We're probably not going to make it. But the charging station issue, I think, is probably not that big of a factor anymore. The issue will be the sheer quantity, because you can imagine, right now, if you go to Northern California from Southern California, there's a couple EV superstations for Teslas, right? Well, when I drove up there, not only was every little, you can't call it a pump, every charging station was maxed out. They were all full, and there was a line of Teslas around the block just waiting. Saba, we're getting there in just a second. I haven't gotten to that one yet. So, and Saba is correct here. I agree with you. I'm not saying don't agree. You're going to agree with me in a second. So the charging stations themselves are there to support us getting from one location to another, unless you're going through patches of the Midwest, right? You should be able to find a spot. The problem is if we get to the point where 50% of all the vehicles on the road are electric, there is no way that the current infrastructure is going to support that. Not only the quantity of cars trying to charge at these charging stations, but also the electric grid. Tom brought up an interesting point. He's like, down here in Southern California, we have periods where like, hey, don't use your power during the day. Only use it during this small window of time because we're going to have rolling blackouts. We just don't have the power. So what will happen is if the expectations are from whether it's Biden or whatever presidential administration that we want to go more clean air vehicles, we want to go zero emission vehicles, then they need to start doing something from the electrical side, because there's no way you get 50% of all the United States is using electric vehicles. We're not going to have enough power for all that. So that brings in a whole nother discussion of, well, do we start building nuclear power plants? Do we start building more infrastructure to get more energy out there to support all these vehicles? It's not like we can magically just create all this energy and say we're done with fossil fuels. We've been using fossil fuels because we just don't have all that energy. So it's kind of a damned if you do, damned if you don't. How often are these cars? I don't know that. Let's see. I agree that it's not realistic. However, I would point out that making mandate means forcing progress. Exactly. And I agree with that there, Dave. I do think that by setting that benchmark, that, okay, by 2030, we want to have 50% of the vehicles, you're kind of forcing people to think that way. And you're thinking innovation. And let's be honest, you go back 5 years, charging stations were hard to find. Now I see them everywhere. So, that is progress. That's evolution. And we will see more and more of that. The question in my mind is, once we have a line, when I go to the gas station as I'm driving to Northern California, every gas pump is full, and it takes someone 2 to 5 minutes maybe to fill up their tank. It's taking a lot longer than that for an EV. So we're going to have to change fundamentally the way our gas stations look. They're going to have to be bigger. There's going to be more slots for you to charge at, because you're going to be sitting there for 15, 20, 30 minutes, depending on how slow your car charges. Yes, we'll get faster charging technologies. They'll probably charge in 5 minutes. However, we don't have the power to do all that, right? We're going to be stressing that grid even more. So that will probably become a talking point in upcoming administrations is, what do we do, right? We're going to have to start generating more and more power for that. And the nuclear discussion will probably come back on the table. I don't know. I mean, can you guys think of an alternative to it? Hey, Big Ep, you think of an alternative? I mean, what would you propose if you had a conduit to our president and said, hey, listen, we can't support all these vehicles because we just don't have the power. How would you go about generating that power? You're going to go wind, you're going to go solar. Even Tom, I don't know the statistics, but Tom was giving me some good quotes and saying, look, even if you wanted to power and to charge your Tesla fully at home, you'd have to have way more solar than your roof could handle. So you're getting that power from somewhere. My guess is energy costs are going to surge, and that will upset a lot of people who already have electric vehicles. Sleepover charging. Maybe that's what you start to have is little, hotels with charging stations underneath it. You could just go and charge and go to sleep and wake up 30 minutes later or an hour later. What we do with all the spent EV batteries? That's another great question. It's funny because I was kind of rushing to make this list up, but here I have my list of challenges. Let me go through these and I'll throw that one in there. Did you see the hydrogen SUV has? Yes, I've seen some pretty cool. Yeah, John says, let's go back to coal. Yeah. Oh, every time I think of coal, I think of Zoolander. It's the black lung pop. No, probably not enough coal to power all of the fuel. I mean, we have all kinds of different issues. So I'm just thinking nuclear. You're going to have some massive energy to power all these electric vehicles. We just cover the United States with an umbrella of solar panels and charge that way. So you've got charging stations, one. I mentioned as my second point here, energy grid, right? You've got the energy grid is going to be probably a much bigger talking point going forward as more and more people are using it. And I was shocked, like I said, last time I went up north to see how many Teslas were just waiting to charge, sitting out front. I think so too, Big Ev. Coal, there's no way. There's no way it's going to be coal. I do think it's going to be nuclear. Let's see, what else do I have on here? Battery replacement. So there's Big Eb's point. Not only are you going to need to replace your batteries, I mean, heck, these phones, you guys, I'm sure you've all experienced this. When you first get it, your phone is great. You get 36 hours of battery life. You can play all the games and stream all you want. After a year, you're lucky if you get 12 hours. After 2 years, you're lucky if you get 5 hours of nothing but straight power and play games. It just sharp decline. That's going to be no different for these car batteries. I mean, I think that they're going to lose their power over time, and the battery life is going to get worse and worse and worse. And pretty soon your 300-mile driving range is now 150. You got to replace that. And how much is that going to cost you, right? Is that going to be 20, 30, 40 grand for a whole new set of batteries? I don't know. What do you do with the old stuff? I'm sure there will be some sort of recycling done internally by Tesla and other companies. But you got the get rid of it, which you'll pay in e-waste, I'm sure. And also, how much does it cost you, right? There's a lot of cost to batteries. They're very expensive. And then the last one, which I think is a little bit different here, and I did a little bit of research into this one just for some fun, is rebates. The rebates that they propose to car buyers to incentivize you to get cars. So RJ said it's not the same. They last longer than phones. I know they last longer than phones, obviously. But the general technology, I don't believe that there's a battery that you can use for 10 years that doesn't start to lose its charging power in its life. It will diminish over time. Well, maybe not the same extent as my phone battery example, but there will be some diminishing returns. I'm sure we have some engineers here who can either say I'm completely out of it wrong, which could be, or that there is going to be a diminishing returns on battery life over time. Imagine we use more trains. I would love it. One of my favorite things about Europe is I lived there for almost 7 years, and I took the trains every day. Underground, took the buses. And in California, if you ride the bus, it's almost like you're embarrassed. It's like, oh, you ride the bus? Something's wrong with you. In Europe, it's just what you do. It's great. Loved it. EVs work crap in cold weather. Yeah, batteries don't usually work well in cold weather, right? Tom says, I asked an economist friend from Michigan what percent of their electricity comes from coal and natural gas. The answer was 95% of EVs are already coal and natural gas powered. Right, but we also have this, the whole point was sustainability plan. And you got clean air and conscious and environment. Coal is dirty. And yes, there's clean coal, right, which I think is probably one of the biggest oxymorons out there is clean coal. I don't know. I think that I just don't see coal stepping it up and getting to coal refineries and are going to be the thing that gets us all the energy we need. It seems like, because of what happened at 3 Mile Island, what happened with Chernobyl, what happened to Fukushima, as people really freaking out. Well, rightfully so. I mean, Fukushima was an absolute disaster. Chernobyl, you still can't go in that area. And 3 Mile Island, well, that created a ton of problems. But I think that there's most likely the technology has gotten better to regulate and control nuclear. I'm not saying I'm a huge fan of nuclear, but I think with one plant, you can offset a lot of other bad things. And there's certainly environmental issues with nuclear versus others, but we need more and more energy to feed the demand that the government is mandating. They have scrubbers on the coal stacks. They have scrubbers on the coal stack. Okay. I guess I just don't know much about clean coal. Every time I see coal manufactured, it's just dirty, soot, gross, dirty. If they can, get zero emission coal plants, I'm all for it. And he has the option to replace, swap batteries regularly. Okay. Now, Raman, that's probably something that all car companies are going to build in because they know their batteries are going to need to be replaced unless the car manufacturer is building that car with the intent of, hey, when your batteries die, just replace the whole car, right? Most of them probably have a quick swap feature, but how much is that going to cost you every time you swap out your batteries? Yes, I want to swap my batteries, but I'm sure that is not going to be a free thing. Let's see. Mike Lewis says, universal batteries that can be swapped out at a gas station and then charged later. So you would, yes, exactly. And I saw some, I did see, I can't remember the name of the car company, but there was one that actually was doing hot swap batteries, which I thought was real. I think Rivian was doing that, if I'm not mistaken. But yeah, that would be a cool feature. However, while it sounds great, you also have to have the facility there. So you got to drive in, have somebody pop open that compartment. It's not going to probably be by hand. Those things are really heavy. Going to have a special piece of equipment, lift out the battery, place a new one. Again, cost. And we think of just charging the vehicle. Now all of a sudden you're paying a much bigger cost and time-wise. So Questlock, I like it dirty. Are you a coal miner, Questlock? Yeah. Okay, cool. Let's see. I would like to see solar panels on cars. I recently saw an article there. Someone developed solar panels that generate energy at night, not just during the day. Yeah. One of the things that interested me years ago was the concept of nanotechnologies. And this one article I read, and who knows if it actually was come to fruition or not, but they were taking paint and putting the receptors on panels, and you could paint it. And that paint were nano solar collectors. So imagine now when you paint your home, it's collecting energy. You look at the worst road in the United States of America. It's called the 55 here in Southern California. It is garbage. It is always gridlocked, especially between the 405 and the 5. But you have 8 lanes for 100 miles or so. No, not the 55. Let's say you take I-5. It goes from the northern Canadian border all the way down to the Mexican border. Take the I-5. In many places, that thing's got 8 lanes. If they could take some paint, some technology, and make that road a solar collector, we might seriously be able to offset a lot of the energy needed through traditional energy consumption methods for a road that just sits there, right? I know that in Europe, in Amsterdam, they actually have roads that are energy collectors. At the bike paths, they're collecting energy. They've just created these tiles that they lay down and run that way. That's interesting, and maybe we'll see more of that, of existing surfaces that sit there and do nothing. Maybe put them to work, right? There was a period of time where Tesla was talking about solar tiles on the roof. And there's different, there we go, John just mentioned it, Elon Musk solar residential home roof tiles. What about, instead of solar roof tiles, you can buy metal roofs. There's a house down here got a really nice metal roof. What if those metal roofs were just 4 foot by 8 foot panels that you would slap on your roof, and it looks like a roof, but it's a solar collector. And now I do that on all sides of my house that face the sun on a regular basis. I'm generating a ton of electricity, and I'm not creating anything new. My surface space of my house is still the same. It just now it performs a function. That's probably where we're headed. But again, I think that is, I would say, a ways down the road till we actually have that fully implemented. But that should be a real interesting talk track for anybody who's looking at, well, where do we get this power from? Why not use existing methods? Just modify what those methods are: roads, paints, homes, skyscrapers, buildings. Maybe in the future, anytime a building is over 3 stories tall, they have to use these solar collecting panels. Why not? Make it a mandate. Anyway, I could go on and on and on. Let me go to the rebate side of things before I go too long, because I thought this was rather interesting, and then I'll get to some investment opportunities here. Energy collecting paint, why not now, right? Can you design a little windmill to pop out of your vehicle? The wind resistance would drag you down. So I wanted to just go through this one real quickly. A lot of people here are looking at buying solar or an EV because you get rebates. Well, there's qualifications for it, and this may be a challenge going forward because they're making it a little more strict. So you can get up to $7,500 here in the U.S. Here's the qualifications. It has to be for personal use. You can't buy it to resell it. It has to be used in the United States. If you're married and you make over $300,000, you can't get the rebate. If you're single, you can get it if you make under $225,000. So right away, you're limiting some people. It has to weigh less than 14,000 pounds to get the rebate. If it's over that, you ain't getting the rebate. Final assembly must be in the United States. I love this one. Make it American, right? At least some extent. The parts are all foreign, but at least put it together here and give us some jobs, because we're giving you that $7,500 rebate, up to $7,500 rebate. So it must be assembled in the United States. Made by a qualified manufacturer. This is one that I kind of raise my eyebrow a little bit to, because if you're going and you're buying a vehicle, let's say you buy a Lucid, a Neo, a Canoe, check and make sure that they are a qualified manufacturer, because you may be thinking you're going to get that $7,500 rebate, but you may not if they're not qualified. They got to be on this list that the government has. So that's one you should pay attention to. What else? They have to meet critical mineral, I can't even spell it out, mineral battery requirements. So there's certain things that they have to meet with regards to what's put in these batteries, and that may also prevent you from getting the rebates. It's only for new vehicles. And then this is the one I thought was kind of interesting. MSRP cannot exceed $55,000 for cars or $80,000 for trucks. Right now, that is it. Now, the other interesting piece here is if you're buying an EV vehicle, you can get up to $2,500 as your base, right? You get that for buying the vehicle that fits these requiremements I just showed you. If it's a 7 kilowatt hour battery or more, you get $417 extra. And for every kilowatt hour your battery is above 7, you get another 417. So let's say you have a 10 kilowatt hour battery, you would get 417 times 3, because it's 3 above the 417. So that's how you get to your total of $7,500. So there's some of the qualifications there, which I thought were interesting. Now, Personally, I'm just going to say this personally, I'm not going to buy an individual EV stock right now. I might trade Tesla because I think it's got good fluctuations and I think there's great premium in Tesla. I like options on Tesla, is great. I'm not going to buy one outright unless, the only one I would buy is Canoe just because I like Canoe and why not? What I would recommend, and this question came up earlier, I think it was Margaret brought it up, is you should look at buying an ETF that holds these different projects. However, go and see which one has the companies you like. So I mentioned a few. Those were just the car companies. I haven't talked about assembly, parts manufacturing. I haven't talked about charging stations. I haven't talked about batteries. I haven't talked about all the little tertiary companies that go into making up EVs. And that's what are in a lot of these ETFs. So I'm going to run through like 5 ETFs for you just for fun. Merlin stacking up expensive challenge. Okay, let's do it. Let's go expensive challenges. This one is called HAIL, H-A-I-L. This is the S&P Kenzo Smart Mobility ETF. Notice its number one holding is Nikola. I don't know how good I feel about that. I mean, we all notice Nikola is not looking great. Now they're starting to maybe resurge a little bit. Let's go NKLA. Here is your Nikola chart. Well, back to $1.30. Long cry lower than we were saying to go short this thing when it was at $90. I wish I shorted it, and I wish I kept it all the way through today. So this chart does not look very good, although Nikola is now releasing and saying they actually have some trucks on the road. Great. You have XPEV, Rivian, you've got Honda Motor Company, you've got Uber, Lee Motors, which you just looked at, and Tesla. And again, these are all in order of the highest ratings in these ETFs. So that's HAIL. Next one on this list is BAT, B-A-T-T, more of the battery manufacturing. It's the Advanced Battery Metals and Materials Amplify ETF. 113 different positions in this one. What is different about this is I look through, there are actually BHP and Glen. Those are straight up natural resources, right? That might be just for the lithium and things that go into batteries. So that's why it's got the ticker symbol BATT. But we're getting to the car ones. Here is the Lithium and Battery Technology Fund. Again, you can see you've got Bid Motors in here. TTK, what? I forget what TT. Oh, this is TDK Technologies. Rivian, Panasonic, Tesla, and ALB is its number one. Now we start to get into something I'm more interested in. But look at the list here. This is the Autonomous Electric Vehicles ETF. You know, right now, autonomous-wise, Google's probably going to take the lead. I would put Google and Tesla as my number one and number two holdings. It has Toyota. Did I type in TMC? I don't think it should have been TMC. I got to check that one. I think this actually may be TM, maybe Toyota Motors. I may have quickly typed that one incorrectly. But you've got Tesla, NVIDIA, Apple, Intel, Honeywell, and Qualcomm are its major holdings for Drive, D-R-I-V. Here's the KS Electric Vehicles and Future Mobility ETF. Again, more names we've mentioned. So you've got Tesla, you've got APTV, ALB, Rivian, MG, NIO, UMI, and Plug. So different resources here that aren't just car manufacturers. It's also charging stations and things like that. And let's see, IDRV, 72 holdings. This is self-driving cars. You guys tell me on this page right here, this is their top, 6, 7 holdings. What's missing here? What's missing on this list? If this is self-driving EV and technologies, you got Rivian is their number one, which I wouldn't say self-driving yet. Tesla's number 2, APTV, Lucid, Lithium, QS, ChargePoint, and Fisker. I look at this and say, where's Google? I don't think you could have it on here without having Google on this list. But all right, I'm not the one building that ETF for the masses. Let's see, what are we at? I think that was it. So I went through like 5 or 6 different ETFs for you. There are actually leveraged ETFs you can use as well. And to go back to the original question, my personal feeling on this one, Scott, is I wouldn't tell you to go buy a specific one. Yeah, Google's missing, right? With what they're doing with their driverless cars, it's hard to not include them on that list. They're definitely one of the leaders out there. So Scott, my recommendation would be go an ETF. I would run through some of the names that we talked about here, and say, oh, well, I like this company or that company. And I'd look at the composition of these different ETFs and say, okay, which one has the greatest exposure to the car companies I like? And I'm also going to get 30, 40, 70 other companies in here to help mitigate my risk. Because right now, these charts all look bad. I mean, they look really bad. Every single one of them we looked at. I mean, again, it looks LCID. This chart looks like absolute garbage. NEO looks pretty bad, right? You're sitting back down in your multi-year lows. You got BYD, This one actually is looking okay. It's like actually kind of trending up for about a year now. Fisker, at least it's not tanking like some of the other ones. You have Nikola, which we joke on all the time. Right? A lot of these look really, really bad. NVIDIA for self-driving, yeah. The trick there is NVIDIA is going to be the brains behind it, right? They're not creating the AI themselves, but they're creating the infrastructure for AI to thrive. So yes, NVIDIA, and I would start looking at maybe some of the other chip makers, right? Who is in that space? This is something that Larry talked about years ago. Larry said he wanted to buy NVIDIA. This is back in 2015 because there was an article saying that NVIDIA wants to be the brains for driverless cars. That was one of his main reasons he started even looking at NVIDIA, and then it turned into, wow, there's a lot more here when he started peeling off the layers of the NVIDIA onion, and since then, NVIDIA's just gone gangbusters. So yeah, I would totally agree with you, options merchant, NVIDIA for self-driving cars, although, part of it is I want to buy something I know is going to, I want to buy something that has a high probability of going up. I would argue that NVIDIA has already had its boom cycle. Now, I still think it's a great company, but the valuations on it should come down. And you've seen it's dropped from 500 down to 400. So it's lost 20% of its value in the last 3 weeks. Not surprising to me. Really, it's not surprising at all to me because it had such a ridiculous run up. It was bound to have some profit taking there. So timing also becomes an important one. While I do think NVIDIA will do great down the road, wait for some pullbacks here. You've got this gigantic gap that goes back to 300. Could it fill that gap? Yeah, I think it can. All it takes is one bear market rally or bear market drop, which we're in. We can see a pretty ugly market right now. So where does Exxon fit in the EV future? I don't know. I can't answer that one now because I just don't know. I have not really followed what they're doing. Talking Monkey says LiDAR chip makers missing too. Yeah, I don't know those specific LiDAR chip companies, but again, as you dig into it, you want to know, okay, if these companies are going to be using LiDAR versus the cameras that Tesla uses, then I want to invest in that technology. And again, there's so many different avenues you can go down. That's why I think it's actually kind of nice to look at these ETFs and go, okay, well, maybe I'll buy one that focuses on autonomous vehicles, and then I'll buy another one that focuses on the battery technology and things like that, just to kind of spread my risk around. It's just too risky, in my opinion, to buy one at this point. I think a lot of the ones we've looked at will probably go bankrupt and sell their assets. Do I think that Canoe is going to make it? I really hope they do because I want to see those on the road. I want that lunar landing pod with that cool roof rack. Someone asked about the roof rack on the Canoe. Yeah. I would like to see that. Yes, they have a roof rack, but that vehicle could probably have a solar panel on the roof. I don't know why they didn't do that. You look at things like Fisker. Well, Fisker's already gone bankrupt once. They got bought by a Chinese company. Will they go bankrupt again? It's possible. Polestar, great looking vehicle. I don't see a lot of them being sold. The longer they go without getting adoption and vehicles selling, probably going to fail. You look at Lucid. I am seeing more Lucids on the road around here, but they're also kind of based where I live, so you would expect to see more. So anyway, it's a tough road to hoe here, picking out which one is going to be the one that makes it. I think we would agree that we're not going to go backwards. You're going to see more of a push towards more electric vehicles. And while I agree with Tom that it's unrealistic for us to get, I think, to a 50% electric hybrid or hydrogen vehicles by 2030, what about 2040? What about 2050? And we will see our markets, our infrastructure. When I use that example of the horse and buggy back in 1885, and all of a sudden 1886 we got a car, there was no infrastructure for that either. But they started to build infrastructure. And as they became more popular, they built more infrastructure. Because why? Because the money is going to be in some of the infrastructure. There will be good money in charging stations. There will be good money in battery swapping sites. So more companies are going to start to build those businesses on major thoroughfares where they'll be using electric vehicles. And we'll probably see more electric vehicles. I hope we find something that is a cheap, renewable resource that we can create out of thin air. It'd be great if we could just take oxygen and make a vehicle that ran on oxygen or water. CNBC is a new replacement for the financial magazine cover concept. CNBC talked about NVIDIA too much, and now it's dropping. Yeah. Well, remember, one of my favorite stories is back in 2000, Money Magazine had an article that said, "The great boom. Join the market, join the rally before it's too late." That was the dead high. So that month, that was the dead high of the market. So a lot of times media is the exact opposite, right? They're looking for sensational headlines to get you all in. They're late to the party quite often. All right, I am way late on this show today. What time is it? Where's my watch? Holy cow. I want to run through our top markets here because some of you had a glorious day. I had a fairly inactive day, but it was a great day for me. Obviously, you know my short position on the Russell. So your NASDAQ down 1.91% as we speak. Now, keep in mind where we're coming into, right? You're coming into some demand zones. I wouldn't argue it's the strongest demand zones, but we're coming right back down to that on the NASDAQ, so maybe we'll get a little bit of a pop up tomorrow. I kind of am anticipating a pop up, particularly because what you saw with the S&P 500. S&P is even deeper into that zone, right? 4 of the last 5 days have been brutal for the S&P. You are down 1.69% at 43.72. I think that if we do get below 43.60, then you're going to go all the way down to 4,300 pretty quick. There's an unfilled gap there that goes to 42.99, as you can see on this chart. I still am bearish on this overall, but I do think you'll probably see a small bounce on Friday. I hope not. I hope we break and we just go into terror panic mode. Now, the one that I got the biggest position in right now is still this Russell. Now, someone asked me what was my target on this one. I will show you how I measure head and shoulders patterns, because this is a head and shoulder pattern. I go straight down to the neckline from the very top of that, and then I will measure from the break, which is right there. So where do I think it's going? It looks to me like it's headed back down to the lower end of this box, which is going to be right around 1652. Now, with the amount of put options I have on Russell right now, if we got to 1652, I'll be doing some extreme celebratory dancing. That will be a home run hit, and I did not plan on a home run hit. And of course, we have a long way to go before we even get close to that. But that's the target for those who are asking. It's really the bottom end of this range at 1650. So that would be pretty good. That's another 170 points. Am I get that right? 1650. So 140 points lower than where we are today. Certainly some good opportunity. Noam says, I see a strong pop up in the S&P tomorrow. Yeah, possibly. It's one of two things going to happen. You're going to get that little, relief rally, value hunters, which it seems like we always get, right? When we have a pretty sharp decline, it always feels like value hunters come in on a Friday and take it up and, okay, we're saved. However, the last couple of days have been some pretty aggressive sell-offs. And if you look at the charts, you're out on some volume. Volume isn't anything that's like parabolic, but it's definitely starting to surge. We did break through some demand zones. I mean, today was a good example of that. Let me go back to SPY here. You're getting elevated volume, and we haven't had what I call blow-off volume, and that hasn't happened quite yet. On the SPY, I'm actually got another level I'm looking at on SPY right around 426, and that is just because this area of consolidation that goes back to June 6th, 7th, and 8th. So that's kind of where I think we're headed, although notice we're at this exact moment. It's the dead low from June 26th of this year. That low price was 431.19. Today, we got to a low of 431.23. So we're right at that lower demand zone. There's one slightly lower than that. After that, I think you're looking back down around 415 on the S&P, which would be a pretty significant drop from here as well. Will I scale out or keep all your contracts in play? It's a great question, Liz. I was literally just finger on the trigger today going, I just don't want to be greedy here. As again, I've been very open about the trade. I thought we were headed down. I thought that it was going to go lower. But we're just we're the tail end of September. I still think you got October to go. So I'm kind of being greedy here. I know, and that may come back to bite me. But I'm going to hold on to this one. I almost sold out of half the position today just to lock in because it's been a pretty great winter so far. But I think I'm going to let it go. I think my initial plan was I want to be out October 17th. Now, on that Russell, actually, let me go up the list here so we can get to the Russell because I haven't quite gotten there yet. Here's your RTY. So there's the Russells. If I get down to my initial target, my initial target was 1825. It was this red line right here. Right, that's where my initial target was 1825. If I get down to there, I may sell out of half my position just because I don't want to be greedy, and I'll let that second half go. This we may get a final flush next. Who knows? Who knows? Greed is good, yeah, right? It is, but again, what I don't want to have happen, and I don't, honestly, I don't really even feel like, I don't even like talking about it like this because I feel like it's gloating, and I definitely don't want to be doing that. It's just a trade that I have open, and hopefully it will work to my expectations, and then great. But you guys know the numbers, you know where I'm in at, so this could be a very good winning trade. Hopefully it pans out, but I look at this price chart, and my initial thought was, if we break this neckline, we're probably going to hit 1825. So I need to kind of stick to that. Unless we go through that so quickly and just rip below 1825, it would have to be a very fast-moving day that just blows through it, and I see volume start to surge, and then the headlines turn sour. If all of a sudden the headlines turn sour, market correction, bear market, you see because we're long overdue for a flash crash. Let me just say that. We are long overdue for a flash crash, which is where you get algorithmic trading systems, all those bots and everything just craps the bed all at once. They all panic, they all sell, and because it drops, they start shorting. The algos start shorting, and we haven't had that yet. We haven't had a 5% down day since 2020. Well, it's 3 years. These things happen every now and again. So part of me really wants to have the just cataclysmic fall in price. Of course, that would hurt a lot of people out there in their 401ks, but it won't be permanent. It'll be a short-term drop. Lori pointed out that the dollar index was coming down today in the ES and what. There's a disconnect going there. I'm not sure why that is, Lisa. Let me get to those markets here so I can wrap up before a 1 hour show. Anyway, that's your Russell. I'm still short on that one. Bitcoin today, 1.32%, but who cares? It really isn't doing anything here. Gold. I love the line. It's actually been respecting this. Now, this line is not drawn in the right place, just so you guys know that. It clips off this peak here from the 28th of June, but I did it where it had the most points of contact. It actually rallied up to it yesterday, kissed it, and now been falling aggressively from that point. So I love when those things work like that. But gold down 1.4%. I did really like SLV today. I am long SLV, as you guys know. I have a lot of SLV, and I will most likely be selling some more calls against positions that I have not covered yet. I sold some covered calls at 22 on my 21.58 position, but I have some that's unprotected. I may actually go for 22.50 depending what the premium is over the next couple of days. Dollar index. So there's your dollar index for today. You have a shooting star for Thursday. That typically leads to what? Typically leads to a down move. If that happens, if we get a nice red candle tomorrow, that would support a market rally tomorrow. You've got, the S&P into demand. You've got dollar index at a shooting star. I mean, all things do kind of point to a bounce tomorrow, but we'll wait and see. Crude oil. We had that shooting star 3 days ago. All right, you can see that one here on Wednesday. Hold on a second. Why am I? Oh, there's something wrong with this. It feels like Monday. Oh, I was on the wrong day. Tuesday. Looked weird for a second. You had a shooting star on crude oil on Tuesday. You had follow through on Wednesday. A little bit more follow through today. Because of this, because I think that this is going to continue on down here, I am still holding my knee shares or my So there's knee, right? This is one I had talked about. I went in because of the shooting star over here. Today was great. Love this one. This was a great day. And then I also have Duke Energy. So there's the Duke. The Dukage. Nice follow through, and I think you'll see more downside movement. Remember, both of these trades were selected on last Friday as shorting opportunities based off a specific set of rules. They met those rules, so trades open on both of those. So just kind of keeping you in the loop on those trades. I did not close them out. But I may start to close those out here soon. And finally, last one, which is just unchanged on the day, and that is the 10-year. We talked a lot yesterday about bonds and what's it going to take for this yield curve to get back into shape. Well, that long end of the yield curve is going to surge, and I feel very confident that we're going to see a higher surge in the 10-year. That's what's going to happen, right? You guys remember that discussion yesterday. If you have any friends who aren't really clear on how yield curves work or why we're going to see that 30-year fixed rate mortgage surge even more. Yesterday's show I thought was pretty good at that, and today kind of met my argument. We're seeing that long term. They're going to have to sell these bonds at higher prices. We're at 450 right now. Well, if you look at the next logical step, let's go weekly here. You can see my lines on the screen. I got 470 as your next stop, and that's because of just this small. Let me zoom way back over here. I apologize for all the crazy screen movement. 4.7, and that's really kind of this double top little tap you had going all the way back into 2007. 2007, 16 years. We have not seen the 10-year this high. That's crazy, right? That's a long time ago, but it's not even that strong of a supply zone. I personally think we're going to be headed towards that 5 mark. I think that getting to 5 by the end of the year is a very, very real possibility. It might even be before then. If we see these markets crash, if we see them, start to sell off more in September and into October, as I believe that they were going to do, you could see this at 5 in no time and possibly even higher than that. So keep your eye on this. That 10-year, I think, is probably one of the more important things for you and I to be looking at right now. The markets, what they really want, they want that short end of the yield curve to come down significantly. It's not going to happen. It will not happen until next year sometime, if it even starts to drop. It means the long end of the yield curve is going to come up. So, the rising 10-year, that means the dollar will most likely be rising as well. It was interesting to see the daily pattern here. Oops, I don't have it on the screen. It was interesting to see that the daily here is a little bit of a hesitation. That 10-year, real bullish. Remember, the higher that this goes, more people are going to buy dollars so they can buy the 10-year because they get a better yield. Yep, an 8.2 30-year mortgage rates by year end. I agree. I think it could be higher than that, Big Eb. And again, these are all domino pieces. None of this stuff is going to happen fast. It's just like, how do you position yourself for it? And I would make the argument to anybody right now that's still holding, your 401k, your IRA positions you're holding long. You might want to go defensive, buy some puts to protect your position, or just go to cash and be safe, because if it does start to crash, and the economic data I looked at yesterday really doesn't support a crash, it shows economic stagnation. It shows GDP declining, which means businesses are going to suffer. If GDP goes down, that means businesses are slowing down. If businesses slow down, that means more people are going to become unemployed. If more people become unemployed, that means people spend less. When people spend less, businesses suffer, and all of a sudden... So it could be slowly starting those wheels of a downward move. I don't think it's going to be fast. I think it'll be slow, but positioning myself that way right now. Possibly more bank failures. Again, the higher these yields get actually helps banks. The higher the long term is. The short end is what's killing them. It's the long end that actually helps them out. Monday be buying more 13-week T-bills. How could you go wrong with that, Les? Honestly, how could you go wrong? 5.5% for 3 months? Do it. Load the boat. Why not? Okay. Anyway, I'm going to wrap up here, guys. I went way longer than I wanted to go today. Let's real quickly show you your earnings calendar. Actually, there's nothing on earnings front for tomorrow. Big Eb, you got an hour show today, buddy. Damn it. Didn't want to do an hour show. I'm trying to get these to 30 minutes, but apparently I went long today. Let's go to Forex Factory here real quick, because you do have a lot of announcements coming out. And then I will say adieu and wrap up for tomorrow. And I do have a question. I'm not trying to avoid the questions that you guys have sent in. There is, what's the date? So 21st? Okay. Tomorrow is the last day to vote on Celsius. So Celsius is one of those lending protocols that is not doing well. They were in bankruptcy, and it's the last day to vote on the proposal for the settlement. I'll go detailed tomorrow, but just in case someone needs to vote, I am voting for it because I just want some money. Just give me my money out. I learned my lesson. I'm going to lose 40, 50% of my cash at Celsius, but I want some money back. Give it to me and call it a day. So I voted in favor of it just to be done. I'll talk more about that tomorrow. So here is your Thursday. Let me run through some of the stuff. The big shocker was really what happened with the Swiss National Bank. They were expected to raise 25 basis points. They didn't raise at all. They actually stayed right where they're at, which was kind of a shocker. And the same thing for the UK. I wonder who they're trying to copy, because I think a lot of people expected the US to raise on Wednesday. Well, we didn't. So maybe they took our lead, keep up with the Joneses, if you will. Swiss franc, They kept the same. Same thing for the British pound. Other economic news for the U.S., you have a disappointing Philly Fed manufacturing number. Existing home sales were worse. Shocker. And then let's look at what's going on for Friday. Calendar. And here you go. For the 22nd, a lot of stuff going on for the European Union. You've got flash manufacturing and services numbers for France, Germany, the EU as a whole, the UK, and for the United States. And then for Canada, you have some retail sales numbers out, my friends. Is all of it. A lot of stuff covered on today's show. I did not expect to go a full hour, but thank you guys for the questions, the interaction. I loved it. Hope you did too. If you have anything you want me to discuss for tomorrow's show, it will be a good whiskey day tomorrow. You can email me at tradermerlin@gmail.com or put your comments down below any of the YouTube videos, and I will get to all that stuff on tomorrow's show. Until then, cheers. Have a great day. I will see you guys tomorrow. Take care.